Good day, all. Ira Epstein of Linn Associates with your financial market wrap-up for this Thursday, the 2nd of January. Dare I say it? 2020? Wow. Santa Claus has come to town, and boy, he is still rocking. And I know you're going to say, to me, Christmas is over. This is the beginning of the year. Not quite. The Santa Claus rally can run between the 3rd and 7th of January, depending on the different services that you're looking at. So today's big rally, nice. What were we also talking about Tuesday? New deployment of money in different sectors today. That's in the market. Could go right into Friday, but somewhere along the line here, get cautious. That's all I'm saying. I'm not predicting a top. That's not what I'm saying at all. I'm saying that you've run so much that you don't need a reason to get a bit of a back off, and you want to have some cash on that back off because the seasonals overall are still bullish at this time of year. The dollar up strong today, metal markets up today, bonds and notes up today. It was still a very volatile day. You had almost a 2 full point range in the bonds. Go on your charts. You don't see that very often. New all-time high close on the weekly charts. Now, the week's not over, but we are 21.5 points higher for the week. When you come to the daily bar chart, a new all-time high and a new all-time high close on that. The pattern is one of a lower low and a higher high. I can live with that. The market's over the 18-day average, which is over the 100-day, which is over the 200. So you have a classic bull market setup where the shortest term average is over the medium term over the longer term. Where's the resistance? The upper Bollinger Band. So before it's attacked, I hope it's attacked for those long, at 32.75 or whatever, that should be a resistance point, not a top, a resistance point. And what's keeping this market going? This, your embedded slow stochastic trade. As long as these numbers that make up this oscillator of slow stochastics, both numbers staying over 80, I call it embedded or locked in a trend. It changed from being overbought, broke out, and it has stayed up. And until it's lost, I expect, just like you're getting here, I expect on the breaks, the pros to be buying. I expect them to throw in the towel if the market loses the embedded reading. It has not done that. So you still have the upper Bollinger Band as a potential target. Lose the embedded reading, I would not be surprised you challenge the 18-day average of closes. NASDAQ, the same pattern. You can't argue that it's not there. You had the buying on the pullback. You didn't lose the embedded reading. Intraday, it was interesting because on this break, you did lose it and you gained it all back. Now where's the target? The 89.30 area or wherever that Bollinger Band comes in overnight. In the Dow, take a look with me right here. Here's a market that lost the embedded reading. Now, what did I say on Tuesday? And I'll stick with it. The only time it can get it back in this pattern is immediately when the market reopens and it's got to push. Well, what it did today is you never took out yesterday's low, Tuesday's low. You just stayed immediately higher and you pushed and you went to that upper band. This market stayed good. The weakest part of this sector is the Russell, and it managed to still close lower today. It's kept the embedded reading out. You see that? Lost it, made a run, hasn't finished it. Excuse me, until today. It hit that number and it held. That's all. This is the one that is my least bullish of all the indices. In the VIX, you got to the 100-day average. We were talking on Tuesday, would the market be able to make a run to the upper Bollinger Band? I wasn't looking for much beyond that. And if it breaks, will support show up at the 18-day average? Well, you finished at 1247. That 18-day didn't hold it that well. That's a full 100 points under it. Even if you take out 1172, though, the last break low, you have a higher high and you'd have a lower low. It's not trending in any manner. In the T-bond market, let's take a look at Tuesday. This is where we finished. Oversold, made a run for the band, didn't go anywhere. Today, you come right on down to 115.5. You hit the lower Bollinger Band. That number's 155.6. Today's low, 155.5. And you turn right back and you went to the upper, 18-day average of closes and ran into the brick wall. So I think the market today is saying, at least my guess, enough's enough temporarily for higher yields. The market's pausing right now. When I come to the 10-year notes, it's a battleground against the 18-day average of closes with an outside day up. The pattern has been, even without today, and I'll take it off, higher lows, higher high, right into this brick wall, that 18-day average, where today the market did something different. It first breaks through yesterday's low, then comes back with an outside day up. Now, that outside day is important. If you take out the low of today, I wouldn't be surprised to make a run for the lower band. Don't take it out and hold and stay over that 18-day average, and you keep the uptrend alive, but now the bias is up and momentum's pointing up. You could put into play wherever that upper Bollinger Band comes in tomorrow. TLT did the same thing, but yesterday. So the market got down on Tuesday to the lower Bollinger Band, and today right back to that 18-day average. Are you seeing a pattern? Because they do repeat time and time again. Not every time. I don't know anything that does it every time. And if you do, God bless you. I don't. But I keep looking at these things and support, Bollinger Band, resistance, upper Bollinger Band, brick wall, 18-day average, line in the sand. You start putting game plans together. Dollar index, you went down pretty hard on Monday and Tuesday. Were we getting excessive? If you take a look, we were oversold in the market. I had mentioned it, I'm sure of it in the Tuesday tape. The question is, can you get a bounce back into the Bollinger Band? And that's what you're doing today. You're still oversold. You're getting a bounce, not a trend, because you got a higher high, lower low. I don't have anything here. I've got a market that's gone from a vertical price rise to a vertical decline. Eurocurrency, a corrective move. Okay. You can see momentum, which on Tuesday was overbought, 2 days over the upper bands. What are the odds of staying over Bollinger Bands or under them? 5% of the time. And one of the things that I teach is that I use each consecutive close over, the keyword's consecutive, and I subtract from that 5% a percentage point. So coming into today, I saw a 97% chance that the market's going to try to close under the Bollinger Band. That's not a trend change. It's none of that. It's just those that are percentages. And now I'd be looking how, if the market continues to break, what does it do with the combination of the 18-day and the 100-day? Also, we've had a bullish crossover where the short-term 18-day got over the 100. So I'm going to be looking to see if that support is there. In the British pound, 3 days, 4 days in a row of hitting the 18-day average of closes and just trying to figure out what to do. Now, at the end of the day, because of this, you've got lower highs on the swing line, lower and low. The settlement at 131.56 is under the 18-day average. So going home, I think the bears grabbed control of the market unless and until 133.12 is taken out. If that's taken out, because of this deep break low back here, if it were just moved and up, you could actually create an uptrend with this as the support, arguing for a move back to 133.91. So the bears have their hands full. They've got to protect that from not occurring, as I see it, but they are in control going home. Japanese yen, as I mentioned on Monday and Tuesday, I thought Bloomberg was just pushing this trade. I had watched on Monday, it kept saying seasonals for the yen stronger at this time. Definitely right. And I'm not looking for much more than this rally up to 92.85. In the January Bitcoin, the trend is down. Lower highs, lower lows, battleground. Can you see it? Look at the 18-day average. Tell me that's not the current battleground. But trend down, support comes in at 67.97 with resistance at 72.12. In Brent versus WTI crude, in the March contracts, you're just hanging here at the 5.25, 5.30 level differential. But when you take a look at crude, keep in the back of your mind a couple of events. Number one, because of when New Year's Day fell yesterday, the EIA reports come out tomorrow morning. So we're going to get natural gas and crude, distillates, gasoline. That's going to be important. Today, momentum took over the shift, and momentum is saying that the reaction should be bearish to the report unless you re-embed the slow stochastic reading, and if it doesn't, I'm looking for price in the 18-day average now to make a run at each other. I'm doing the same thing in the March WTI. This is a major warning sign to me that this uptrend may have run its course. Momentum has left the building. That's the way to look at it. Can it be gotten back? Sure. big up move tomorrow like we had in some of the stock indices, but barring that, be careful. And here, you're down so much already, down to a 60 and a 73 level, you cannot get the embedded reading back in gasoline. So I'd be surprised that you don't hit the 18-day average of closes. And in that gas, still bearish, warm weather. I just saw the forecast for the next 10 days, and throughout the Midwest, we are in the 40s. We're not talking the 20-degree January weather. Yeah, at nighttime, you might slip down a little, but during the day, that's where you're at. I was outside today. We're near 50 degrees in Chicago. This is January 2nd. I'm used to freezing and so on. That's one of the things weighing on nat gas, the demand across the country for it. It's just not that cold at this point. Want to remind you on my research. If you haven't seen my research, I think you'll find it fairly fascinating as to what we do at the Linn Group and what I do. In the Linn Group, we have gray hair, a lot of us. Why? We've been around these markets. We talk the market language, be it futures markets, be it options, be it spread strategies, option strategies. We're covering them for you. And as many of you know, I'm about to start a SPDR ETF daily service. So it's far along. It'll be out this month. So I'm just going to be practicing with it. Tomorrow I set up the charts and put everything in, and by next week I'll start some recordings. I'll let you know when they're available for you to see. But if you'd like to get a trial to our research here, it's simple. Why not see what our clients get? All you need to do is give us a call or go to our website under www.iraepstein.com, and when you do that, you'll see free offers on the bottom right. Sign up for what you want. We'll put it in your hands. I'm Ira Epstein. You have a good day.